in the year, I think it was 2016, 2017, there was, during the trading of the markets, something happened with a certain currency, the Swiss franc with the dollar. And when a certain currency flattens, like it suddenly loses value on the market, it affects all your trades on the platform, and it affects every investor in forex trading. It's sort of like when inflation happens and you have dollars in your bank account, the effect trickles down to the last user of the dollar. So I wanted to draw attention to friends here who are interested in getting involved and investing in forex trading to pay attention to certain things. There are two types of brokers in the forex trading market. There are those that are regulated and the unregulated. Both types are legal, neither is illegal. And so they can both approach people, they can both get customers, and you can invest with either. However, unregulated ones are very high risk, extremely high risk. And also, if they're regulated but by not your local government, then they are also a bit of a higher risk, because then the fiduciary effect, like the law, protects the jurisdiction where they operate. Yeah. So in the incidents like what happened with the Swiss franc, investors from the rest of the world, and we were investing with a very credible broker who was regulated by the UK. If you can check and find out. They were called Al Pari UK. They used to sponsor the Premier League for, like, I think 15 to 20 years before that. They were a very credible financial institution, but then they had to file bankruptcy when that unfortunate thing happened in the market immediately. And so for the rest of the investors from the rest of the world that had not that signed up with them, and and were not locally regulated in their jurisdictions, lost all their investment. There was no compensation because, again, they had no regulation in the country. And so, in fact, now it turned around to be that the court eventually released that from us, from the investors. But before, when they were in court and they were filing for bankruptcy, they actually proposed that they share the risk with the rest of the other investors, yeah, because they were independent of their jurisdiction. And so I just wanted to throw caution out there concerning that. It was a good business. It made great money, especially going about it in a knowledgeable way. But it also carried that risk along with it. So, yeah, it's just something I thought I'd throw in there to help us.
Thank you. Thank you so much, Treasure, for that. This is really appreciated, and it's good that it's coming from experience, because everything has a risk, but how high do you want to risk, especially if you don't have much money to play with. There are people who have a lot of money to play with, and they say, oh, if I invest 1,000, I can afford to lose $1,000. But not all of us can afford to lose $1,000. So what you put in those markets needs to be something that you can live without, right? Not necessarily, but I'm just saying, when you're going into a higher risk market, you need to consider that as well. Thank you so much. So over to you again for the next part of your presentation.
Yes. So
And I will open up for people who want to discuss this as well, but I wouldn't want it to take all our time when we have more to learn today. Thank you.
Right. Thank you, Mama Christine. So now I'd like to request my colleague, Mr. Timothy, to help with the introduction and then coming shortly after.
Thank you so much, Pastor Treasure. As already introduced, my name is Timothy Masembe. With some experience in financial services, and sorry that Pastor Treasure is not feeling well. I'll be co-hosting this session. I hope that I'm audible enough to be able to take you through this. It will be more of a conversational engagement, and we're glad that you spared your time to join us in this session to sharpen our minds in investing in financial markets segment. Locally, or in my local language, we call these chamuso wongo, so that you're not caught unaware. Many of you can share. For those that are in Uganda, you remember the experience of Capital Chicken last year. There's so many events to mention. It's in court. I will not talk about that, but there's so many stories and experiences that unsmart investors or those that haven't got the right advice end up running to. And it's a blessing that you have the opportunity to learn from each other and be able to share experiences and also make our decisions from an informed perspective. Pastor Treasure, if you can just navigate to the next introductory page, I'll be glad.
Thank you very much. Am I audible? It seems like my screen is frozen.
You're audible.
Okay. So, Rachel, could you help me put the first slide? Next. The next slide, please. My screen is frozen. Rachel, could you move to the next slide, please?
She's on the financial markets slide.
No.
The previous one. Yes. Now she's on the one with the old couple.
Okay, so do you know that your relationship with money will outlast you? So I wanted us to reflect on that question. Now, many a times, when we refer to our background, so when we think about maybe our grandparents, there's two relationships that stand out that can speak about them. Even when you didn't meet the grandparents or great-grandparents, if they had a lot of money or they didn't have enough money, you would at least know that.
Have we lost Treasure?
Yes, I think we lost Pastor Treasure.
She's back. There's a problem with the connection, I think.
Hello.
Hi, we lost you, Treasure. Are you back?
Hello, can you hear me now?
You are back. We had lost you.
Oh yeah, I'm trying to use my husband's phone. You can hear me?
Yes, we can hear you. Thank you.
Yes. So, hello. Am I audible?
Yes, we can hear you. Please continue.
Hello.
Yes, please continue. Can you hear me? Can you hear me? Rachel, can you call Treasure and see what's happening?
Okay. Maybe in the meantime, I can just do the support and take over.
Yes, please. Thank
So
you.
what Pastor Treasure was trying to introduce to everyone is that you know that the relationship between the relationship with your money will outlast you. And in this statement simply means that depending on your relationship with money, you can determine how your lifespan or how your lifetime will be spent. So your habits today, in terms of whether you're choosing to invest for the future, or whether you're having consumerism and spending and incurring expenses without investing for the future, would form a lasting legacy for you and your life. And many of us who invest usually look at having retiring, where we have investments that generate returns and equity for us to be able to enjoy our retirement when we're not working. Okay, and since we don't anticipate how long we'll live, we do our best to plan now so that when we do live longer, we have enough resources to take us through those days when we can't afford to work harder. Financial experts advise that if you earn regular income, at least 30%, 20-30% should go into long-term investment for that rainy day or for that time, and then growing your income. If you're earning fixed income and salaries, then it might be difficult for you to grow your money if you don't consider investing part of the money that you earn. Rachel, can you go to the next slide, please? Thank you so much. And now, what are financial markets? Financial markets is basically a financial market is basically an exchange. Okay, it's an exchange where financial securities like bonds, stocks. It's a marketplace where bonds, stocks, forex, and other financial instruments are traded. Okay, I'll go into detail and explain some of those services. So a market, just like a commodity market, for financial markets, they trade, that is selling and buying or exchange of financial products and services. Okay, financial instruments. And the most commonly traded instruments in the markets include forex, which is which we'll look at. Then we have bonds, and then stocks, which are equities of companies that are listed in the stock exchange. Financial markets are regulated. Regulated financial markets. Sorry, excuse me, everyone. Let me just try to turn. Let me just keep it down, please. Excuse me. Sorry, can everyone hear me?
Yes, we can hear you.
Sorry about
Yes.
that interruption.
And
Bring the space with my little ones.
Yes, we can hear you.
I'll start with the common one, which are stocks. Okay. In stock markets, shares of companies are traded between traders and investors. So stock markets, also called equity markets, raise capital on behalf of companies. For example, in Uganda, we have a securities exchange where stocks of companies like Stanbic Bank, Equity Bank, and other companies listed on stock exchange. Lately, we had Umeme, we had Cipla Quality Chemicals. These companies that need to raise capital so that they're able to invest and expand and grow, come and sell shares. Okay, shares are locally we call them emigabo. They sell shares to potential investors that have income that they need to invest so that it grows. And at the end of the year, they give dividends to shareholders. Okay, it's as simple as that. Stock markets trade shares of companies so that at the end of the year, these are able to be these yield returns. If companies make a profit, they distribute that as income in the form of dividends to shareholders, and these shareholders can choose to either maintain the dividends or reinvest it, or they can even cash it out. At any time on the market, investors can choose to sell their stocks in the companies. So if they want to liquidate and exit and either invest in other options or other investment options. So locally in Uganda, we have the Uganda Securities Exchange where these are traded, and the regulation is done by the Capital Markets Authority. And if you're buying stock in any company that is publicly listed, you buy it through the exchange. The exchange has registered brokers that support you and help you with that can help you with trading of the stock. Banks like many of the commercial banks are primary dealers or retailers that sell the stocks on behalf of companies listed on the stock exchange, and they can help you make the arrangements, and you can start investing for as low as even 100,000. MTN, which listed recently, I'll use a lot of local examples just to break this down to you. MTN, which listed a few years back on the stock exchange, recently even introduced using mobile money. If you go into your mobile money, there's an option for you to own stock and buy stock using mobile money. Okay, so they've brought it down to the last mile, to the final, to the last investors, to the primary investors, to the retail investors, you and me. And then of course over-the-counter trades, which over-the-counter trades means that there's a facilitator of that exchange, and these over-the-counter trades can be again done on the stock exchange under facilitation and regulation of the Capital Markets Authority. In Uganda, in UK, they have in the UK, they have a regulator called Financial Conduct Authority. So usually pay attention to these regulators because their actions protect you. So if you're dealing with a company and you're buying equity, check whether it's listed on a market where regulation is very strong. In the US, there's a Securities Exchange Commission, or SEC, that does the regulation and is there to supervise and see that the markets are fair, they promote fair competition, and then, of course, fight any fraud within the financial markets that could derail the integrity of the financial system. It's a very large system in the US and hence very complicated and risky. There are other even secondary products that arrive from the financial markets, something called derivative markets, which are contracts between these are contracts between two or more parties agreeing on an underlying financial assets, like a security, for example. These are very complicated, and it's advisable that before you venture into those bigger markets, you either work with a broker or a specialized financial advisor that can advise you very well on how to invest and consider investing in those markets. Okay. Forex markets, these are exchange of currencies, buying and selling of foreign exchange. Okay. The trade is done between pairs, for example, shillings against the dollar, and then or GBP, which is pound against the dollar, or shillings against the dollar, and several currencies can be traded. But of course, the strongest currencies usually have a lot of activity. And then economic conditions, if you're a trader or if you choose to invest in these markets, just like Forex bureaus that make a margin or a markup on the trade. That's how even a retail trader would do it. You basically buy at the right time, you buy low and then sell high. Okay, it's as simple as that. If you look at the board of a bank, if you pass or a board of a Forex bureau, you notice that they want to buy low and then they're selling high. That margin between the buying and selling price is your profit. And this is determined by a couple of factors and determinants. So following global political economic trends can guide you if you have an ambition, or if you're an investor in these markets, because it informs you. For example, I'll give you an example. The pound in 2016, the pound was trading against the shilling at 5,000, and simply because there was a high demand for the pound. So for investors, it was still a market that had a margin, but the pound was really expensive, and then when Brexit happened, or when UK exited the market in the European market, and they decided that they'll stand alone outside the EU, we noticed a crash of the pound. And what that simply means is that you would need less units of shillings to buy a pound. And I think today it's about 4,600. It can even go down as low as 4,400. And there's a time when prime ministers changed in UK about 3 times. And all these affect how strong the currency is and how investors and then traders prospect and also see the performance of the market. So if you exit the market, it means that fewer people more people will need visas, for example. If initially if you're a member of an EU country, or if you're a citizen of an EU country going to the UK, you'd easily cross through. And it means that people will be buying pounds to be able to spend in the UK market. So if UK chooses to exit, I'm just giving you sort of some of the economic dynamics that can influence performance of a currency and also impact your income or your yield or your margin as an investor in that particular currency. And you need to pay attention to these when you're making your decisions. So if UK chose to exit, it means people would need visas. That limits number of visitors, and hence the demand of the currency sort of reduces. It's as simple as that. Some of those things, it's not as simple, but some of those determinants can influence how the markets are performing. And then, of course, we also have commodity markets. In commodity markets, there's trading of commodities like oil and gas. For those that follow the trends, when the war broke out in Iran, you notice that there was a lot of movement in the oil because Iran is a major exporter of oil and gas. So commodities like oil are traded, and such global political economic factors can influence the trading and the value of and the performance of those markets. Things like cotton and soybean, even things as passion juice, coffee, the coffee that we have here. Much of the coffee is already being traded on the commodity markets, even though it's in the stores of the dealers. And these globally traded commodities, coffee, sugar, gold. Gold is heavily traded in the commodities exchange market. Countries like Rwanda in this region are trading gold heavily. They have a huge contribution to trading of gold. And then, of course, the Middle East markets like Dubai, where we have major gold markets, they trade gold, and these have a big influence on gold commodity markets. Of course, we have cryptocurrency markets. We have crypto exchanges, like we had FTX. There are several other crypto exchanges. The last session that we had, they touched on some of them. I'm not very keen on the crypto market. It's a growing area. People have made money out of it. But of course, and then there are those that choose to create exchanges where different coins like Bitcoin, Ethereum are traded by crypto investors, and then they buy and sell crypto, and then they make money of it, or they make losses. I think when Bitcoin started trading back then, I think it was about, I don't remember the exact year, but I remember 2013, 2014, those early years, it was really trading at a low. The market value was low for Bitcoin because there was limited regulation. Remember, we talked about regulation. Investors usually want to look at who's regulating that particular commodity market, or that particular market. So just like currencies and others are regulated by SEC and then CMA, crypto is deregulated. It's that's why they call it. It's not heavily regulated. It's not regulated as much, and even regulators are still trying to get up to how, because that's the real essence of crypto, giving this freedom to investors to be able to trade cryptocurrency without controls. And we had a commodity market, a crypto market called FTX. This was an enabler. I think even Binance has a crypto exchange. My colleague who presented in the last session touched a bit about that, but you can also do further research about that. And these platforms also carry some heavy risk. There's a time when there was fraud on a crypto exchange, and investors lost their crypto wallets. So with the growth of cybercrime, criminals love using that. However, the technology behind crypto markets is very good, and it's been very helpful, for example, in enabling trade finance and others. We look at stock markets. We touched about that. On stock markets, companies do what we call initial public offerings. And they basically come up and say, I want to issue stock or equity in my company, and I'll basically go through the initial stage of the regulator, and they create sort of an offer and how much the share prices are going to open up the market to be traded on the initial public offer before the market steps in to control the buying and selling. Pastor Treasure, do you want to contribute to that particular page?
You've done it a very great service, sir. So I feel like we should just maybe continue so that we'll give you maybe for the rest.
Thank you so much.
To ask questions, yeah. But thank you so much, Mr. Timothy. So,
sorry about that.
We've heard about the financial method, and we've heard about treasuries, we've heard about shares, we've heard about bonds, we've heard about what they mean. So I want us to go into how does an ordinary person or you as an investor get involved in these markets, yeah? Where is the bridge? There's been information that makes all of us aware of a lot of how, but I have an image. Rachel, if you could put my slide up on the treasury bills and bonds, that helps us detail the process, yeah? The process of getting involved in investing into treasury bills and bonds. Well, you can go about it in two different ways. You can either go direct in the investment of these financial market tools, or you can be indirect. Now, what I wanted to discuss is both the process of if you decide to go about it direct and if you decide to go about it indirectly. Both have advantages and disadvantages. It really depends on your financial goals and circumstances. So I wanted to explain the process, the direct process, and there's a slide that is supposed to help me do that. Slide number 5, Rachel, if you could share it. So there we have the definition of treasury bills and treasury bonds. And basically, like Timothy said, they are ways that government gets funding through lending, through allowing the public to lend it money. Yeah. So basically, and they start at a very low rate, 100,000. So they've made it very accessible for the ordinary person to get involved in these markets. And if you're going to invest direct, Rachel, I don't see the slide. I don't know if the rest can see it, if I'm in the wrong page. And because I have to use Moses's phone, I can't share it with here. But let me run through it audibly. If you're going the direct route, basically you go to a bank account, your bank, where you have your bank account operating, and you ask them to open for you what they call a CSG account. That is a Central Securities Depository account. Now, that CSG account is like opening for you a bank account in Bank of Uganda. Because treasury bills and bonds are traded the Bank of Uganda, the government uses the Bank of Uganda to carry out the operation. So when they open for you a CSG account, then you thank you very much. So you can see right that slide, there's step 1, 2, 3, 4, 5, 6, 7, and 8. So I was here at step 1, open up a bank account with a commercial. Sorry, I had told you if you have a bank account, so you can go and request your bank account to open up a CSD account. Now, when they open up that account, you go and access the auction calendar. You invest in by auctioning. Basically, the government, I think for treasury bills, it's every day or every other day. And then for bonds, it's every fortnight. They open the market for people to bid. Then you get forms. And when you look at the auction calendar, you fill in forms to basically apply to give the government to. You apply to buy the bill or the bond. And now, after you apply through those, when you get the auction calendar, you see the dates when they are auctioning treasury bills or bonds, depending on what you are buying. Then you get a form, yeah? You fill in that form and you give it to your bank. And when you fill in the bidding form, you give it to the bank, they submit the forms on your behalf, and then they let you know if your bid was successful. And the requirements really for it to be successful is just for you to have a bank account that is credible. Yeah. So when it's successful, then you wait for your tenure term, and they give you returns. The interests are every 6 months, they pay you your interests. And then when the maturity period, which is the period that you invested for treasury bills, they go from 91 days, there's 182 days to 364 days. And for the bonds, they are between 2 years to 20 years. Treasury bills, because they are short term, they also have lower interest rates. The current calendar, the financial year in Uganda, runs from July to June. Yeah, so right now, the financial year is just getting started, and I was looking at the calendar earlier on, and the rates right now are at the treasury bills between 14%. It's oscillating 14%, 14.4, 14.5, and the bonds, it's at 16 for the ones that are 10-year bonds. Then for the between 2 to 5 years, there's some 15 and in between there. So that's the percentage of interest that you earn on your principal amount that you put in. The advantage with bonds, if you may be asking yourself, why should I invest in bonds? They are safe investments. They are risk. Normally, they say there's no investment that comes with no risk. But because it is studied risk and risk that is studied over time, and the parties involved are also very highly guaranteed, there's little to no risk. Yeah, as financial people, we are told to never assume no risk, but there's little to no risk in investing in these securities. However, their interest rate is lower than if you got your money and you put it in something that generates money a lot quicker. Yeah. So I see a question. Mama says, what's the minimum investment? It's 100,000 Ugandan shillings. So if you're in Uganda, 100,000 Ugandan shillings is the minimum investment for you to go and invest into a treasury bill. So but then again, the interest is 14%. So when you put in the 100,000, normally we have an expectation of a very high expectation from very low investments. That is unrealistic. And as an investor, it's a wrong place to set yourself at, because then you become prey for scammers, because then they interest you into get-rich-quick schemes, which eventually rob you of your money. So what is realistic is that for safe securities, you get a low return on investment. Then as the risk goes higher, the return on investment also goes high. So for the treasury bills and bonds, that's what I think is basic to share. You can ask questions at the end of the session. I wanted us to also touch a bit on mutual funds. Yeah. Now, mutual funds belong in the asset management sector of the financial markets. Now, this is how I wanted to help us understand this, is that the financial markets have opportunities for us as investors or people who are interested in investment to invest. And those opportunities or those commodities was what Mr. Timothy shared earlier. Those are the stocks. And to get involved in the stock market, you go to the Uganda Securities Exchange. He talked about that. And then we have these treasury bills and bonds, which to get involved, you can either do it direct, like I have told you, you go to your bank account, ask for a CSG account, they open it for you, and then you go about the process. Go to Bank of Uganda website, download the forms, fill in, get you bid for a bill or a bond, and then when you get it, then you have invested. However, there's opportunities that mutual funds have availed to us still that I think would interest you to know. And if you've heard about them, hopefully our session today can help edify you more and help you make a more informed decision. Now, mutual funds belong in the asset management. Basically, now you have invested or you have money coming from wherever it is you're making money. Now, but you don't have a lot of money. Say you have 100,000. Like I said, if you invest 100,000 in a treasury bill, all you're going to get is 14% return on it, which is 140 shillings, I think. But now the mutual funds, they are a type of investment that pulls money from many investors to purchase in different portfolios, like in securities, in stocks, in bonds. Basically, they are organizations that are credible, that are professional, that will hire professional staff, people who know how to read the markets, who know all the risks and the advantages involved in investing in these markets, who come together as a body and collect different little monies from us, and then they put them together in what they call a mutual fund, and then they take that bulk sum of money and then they invest in these commodities that we've talked about. And when they do, the return on investment for them is very high for two reasons. Because like we said, your return very highly depends on the amount that you are investing in. Yeah. And secondly, because they are organizations, they also access a lot of tax benefits. Yeah. And so there's a lot of tax, like there's a lot of advantages, like some of them I've come to find out that they don't pay withholding tax. Yeah, they are given withholding tax holidays. Yet for you, when you go as the direct route, you'll get your returns, but your returns are subject to withholding tax. And the bank takes, the withholding tax rate for us now is 20%. So basically, your returns, your interest that you earn is subjected to 20% withholding tax. So the mutual funds have the advantage of the fact that they take the weight of all of that, and for you, all you get back is the interest they give you. Of course, it's not the same. They won't give you at the same rate. Like the one that we have invested in, the one that I have experience with, gives us at a rate of 11.1, 0.5, it oscillates around there. That is the interest rate that it gives us at. However, you see that at the market, it is actually 14% for treasury bills. And also, they use that money, like I have told you, to invest in many other securities. But you don't incur the risk of investing in those many securities. You actually get the advantage without incurring the risk, because what you do is simply put your money in a mutual fund, for example, a unit trust account, and then they invest it wherever, and they guarantee you the 11.2.4, it keeps oscillating. They guarantee you that return at the end when you want to withdraw your money. Yeah. So so those are that's about the mutual funds. And next slide, please. Yeah, I talked about that. So basically the direct investment and the indirect investment. So like I told you, if you If you choose to go the direct route, you buy stocks directly, you buy treasury bills and bonds directly. If you choose to go the indirect route, you invest through unit trusts, yeah, that compound your money, and then they invest it and then give you a return. Yeah. So that's the second. Yes. So I was telling you, I told you that the advantages of indirect investment is that you get the advantage of pooling the funds together. You get the advantage of professional management because a fund manager who is a financial professional handles the investment decisions for the trust, aiming to maximize returns for the investors. Huh? You get the advantage of diversification because, of course, when you diversify, you reduce the risk that you with your 100,000 may not be able to split it to invest in stocks and then also invest in trusts. Sorry, in treasury bills and bonds, and then also split it to invest in maybe a small business for passive income because it's little. However, when you go through a mutual fund, they exploit all those options and earn you that advantage. And then another thing is the advantage is accessibility. So you get to access these the smaller investors, we get to access markets and investment strategies that might otherwise be unavailable to us. Yeah, because as an individual, there are things they won't warn you about that are happening with the market. There are things you won't be aware of, like how the politics affects the market. Or maybe all you're interested in is, I want a place to put money that returns my money. I am not a financial guru. I'm not interested in becoming one. I don't want to be there monitoring my investments and anything like that. I just want to be a good steward with money, and I'm not that knowledgeable about it. So I just want to put my money somewhere. So it is what I am trying to explain, that it is a good place to consider, and what to expect from it is exactly what I have shared. In essence, unit trusts offer a way for individuals to invest in a professionally managed, diversified portfolio without needing large sums of money or specialized investment knowledge. Yeah. So some of the organizations that do mutual funds or unit trusts, I've heard that banks also get involved these days. They used to be not involved in unit trusts, but lately they also get involved. So you can ask your bank if they have unit trusts available or mutual funds. And also insurance companies, UAP, also Sanlam, and to mention but a few. But when you do your research, basically the information I have given you is supposed to just help supplement that. Then next slide, please. Next slide, please. Oh, yes. So we were asked to also talk about trusts. I can use just 1 minute to talk about this. So trusts exist within the broader financial market ecosystem, primarily as legal structures used for holding and managing assets, not as a direct market themselves. So they can be used for various purposes like estate planning, asset protection, and tax planning. So basically with the trusts, it is now an investor who wants to protect their investment for the long term and wants to ensure that in case something happens to them, maybe becoming incapacitated or the loss of life, which is all inevitable, we all know, that their assets are handled or distributed in a way that they would have wanted. So basically what you do is after I wouldn't say after, if you're in the investment process and it begins to give you returns, if you're investing in things and they begin to give you returns, and you have children, or you, even if you don't have children, and you have beneficiaries, you have people who can benefit and would benefit from those assets if anything happened to you. A trust is like an alternative to a will, yeah, and they have their different advantages and disadvantages. Legal people are usually more knowledgeable about this. However, what I am able to share is that you basically find a trust manager and you entrust them with the rules of how you would want your beneficiaries to gain from your investments. Some of the advantages it does is that they can be shielded from certain taxes that may be attracted upon your death or upon you liquidating some of those assets and things like that. So trusts can hold a wide range of assets, including stocks. So basically, if you've invested in stocks, bonds, real estate, you have cash investments that are big and they can be tailored to specific benefits. Trusts can be used to hold and manage investments in financial markets, such as stocks and bonds. So basically, when you've invested in these things, these trusts are a good or a professional way, should I say, to be able to ensure, yeah, that your interests, the interests of your beneficiaries are met in the event that you cannot emphasize. Maybe something happens, maybe with your brain, or you become incapacitated, like I said, or you lose your life. Yeah. So a trustee or the person that has been given rights to enforce the usage of these assets or these properties or these investments, then they are given the legal right to carry out these interests, yeah, for you. This is how most of the first world country wealthy people are able to maintain wealth in generations. They basically put them in trusts because there are different types of trusts. But one of them that I know that John D. Rockefeller, I think they used because, you know, his wealth has been in his generations for years. And it's one, I think it's called a living report. They only benefit from them for as long as they're alive. And once they are gone, it's not like then the ownership continues or it's forever. It is just to serve the purpose of, yes, I have taken care of you too, or your children, if you decide that it's that kind of trust that you're putting for your children, so that your grandchildren can also benefit. So basically what they get is a living ownership of these assets. So as long as they are living, they get benefits from them. But once they pass away, the benefits are moved on to their children. There are rules under that where they don't get to sell or don't get to do this and that. Basically, you manage your investments long after you're gone, and they meet your interests long after you're gone. So that's what I was able to come up to share with. And if you have any questions, I think we have some minutes for that. But otherwise, thank you for listening. Just the last slide, maybe, yeah, practical steps forward. That's what we're going to share in our discussion. The last slide. Yes, I just wanted to conclude saying that the best investment options are best determined with consideration of one's financial goals and circumstances. Yeah, so it's important for you to set financial goals and then choose your investment options based on those financial goals and also your circumstances. How much are you earning? How much are you able to bring together? How much are you willing to risk? Yeah. How much, like, where are you at in investment, like curve? Yeah. And then the general rule of investment is high risk, high returns, low risk, low returns, no risk, no returns. And I emphasize that that is if it's an investment, not a scam. Yeah. So don't go in high risk ventures with understanding that the rule says high risk, high returns. Some high risk ventures are simply scams, and so they defy this narrative. But if it's really an investment, then a lot of times it's high risk, high return, and low risk, low return. And of course, no risk, no return. I also like to attend to this group of us because there are people who maybe once in a lifetime you get money from inheritance, and what you decide to do is, the banks are going to tax the money and this and that, and if I take it here in its large amount, they are going to tax it. And because you are so concerned about the 20% withholding tax or the 5% withholding tax, you keep it under your bed, spend 10,000, 100,000, 300, and then it's finished. So again, no risk, no return. Yeah. So it's important for us to get out there and invest right, and wait for the returns to come in play. And finally, I like to say it like this: a good place to start, and I learned this from Mama Christine, is to start. Yeah. A while back, she was teaching us about our personalities, leadership personalities. And some of us fell in the category that really overthinks decisions. Yeah. So maybe you'll be there asking, but when can I start? How can I start? A good place to start is simply to start. Yeah. And a good way to learn is to learn. Yeah. I also say that don't say, I will, how do these people do this? How do these people do that? You learn. Yeah. Don't run away from the lessons or the process or the information. Learn. Put yourself into the learning process. That's the best way to learn. And then a good way to succeed, you can guess the answer, is to succeed. Yeah, you don't give up until you succeed. If you try to look for a shortcut to any of these, I don't know if it would still be a good way, but I know that a good way is to really do the do. Yeah, thank you very much.
Thank you. Thank you so much, Treasure, for that treasury. The treasure of knowledge and information that you have given us. There were some questions. Thank you also, Timothy, for coming in. Timothy, do you have something to add before we go to the questions?
Thank you so much. I think Pastor Treasure has summed it very well, but I just wanted to share some experiences, just briefly, so I know that time is not on our side. For those that for those colleagues that feel they can't handle the risk, she talked about unit trust, and I just wanted to add and some experiences of what I've seen and experienced it where I serve. In Uganda, for example, we have unit trust done by UAP, by insurance companies, by banks through their bank assurance departments. These are easily convertible into cash. So compared to your other investments or the alternatives we've seen like bonds, these unit trusts, you're able, if you have savings in the account that you don't think you're using, rather than being in a savings account, at times it's safer to put it in any unit trust so that they generate. Sorry? They're able to generate returns, because these wholesale institutions, they invest in bulk and take the risk, and you're able to recoup your money at any time that you want. So they're really good options. There's a retiree that I know that sold a forest, and instead of building an apartment, they basically put the money in one of the unit trusts, and every month they're getting 15 million, and they put in quite a huge sum. So that money guarantees, because the range is in about 10 to about 11.5. So these carry the risk and invest in more riskier but higher return ventures. like equities and stocks, and then they take a margin between what they pay you and what they earn is what they take as their share of their hard labor. And they're really good options to consider because you earn income while not using a lot of labor, as long as you choose the right trusts. But also know that in more developed markets, these unit trusts can also be a double-edged sword, especially where the companies or the organizations or the institutional investors are not honest enough, or they're not well regulated or supervised. I think we saw that during the financial crisis. But otherwise, that's my parting remark. Thank you, Mama Christine. I'll hand that back to you.
Thank you very much. We have some questions that have been put in the chat, and friends, indeed, we will share the PowerPoint presentation with you. Hopefully, you've registered, and in your registration, you have indicated your WhatsApp number. If not, please put it in the chat so that Rachel can pick it up. So one of the questions was, can foreigners invest in treasury bonds in Uganda? Because I remember when I was in Tanzania, I could have invested in treasury bonds in Tanzania and also Kenya. In Kenya, I can go directly to the Bank of Kenya, but through my bank, KCB. And in Tanzania, also you have to go through the bank, and NMB and CRDB and other banks are able to do that for you. But I think the question here is whether the Ugandan treasury bonds are available for foreigners. Then there's another question: what is the minimum investment for stocks? And then Rachel wanted to, I think she was sharing that in Tanzania they have UTT, and maybe you could explain that, Rachel. And Mugabe is saying that, this knowledge is not available to local people. How do we bring it to the local people so that, because, one time I went to the agent, to change money, and I had my 700,000 shillings, and I was feeling so rich. And, I was looking at people around me thinking, oh my goodness, who's coming around me? Maybe they might want to take my 700,000 shillings. And this man who is a fundi or something came with 4 million. And I thought, whoa, so people do have money, whatever, whatever kind of business they are, but they don't have this knowledge. And I think you find that mobile money has probably started creating different products that help people to invest and save. I don't know, but they need this kind of knowledge and information because the money is there to be invested. So over to you for those questions. And if you have any more questions, please share in the chat or raise your hand so that we can give you a chance. We have about 10 minutes left. Okay. Over to you, Treasure and Timothy.
I'll respond. Thank you. Yes, treasury bills and bonds are available to even foreigners here in Uganda. Both foreigners and nationals can invest in treasury bills and bonds. Remember, bonds are issued by the government as debt instruments. So the government wants money; it issues bonds to raise capital, to raise not capital, but rather to raise enough money to finance their budgets. And at times, local investors may not have enough capacity to fund the entire budget besides using tax and revenue. So they open up bonds, especially long-term bonds, to external investors or institutions that are willing to buy bonds in Uganda. So multilateral organizations do use bonds For example, Ugandan government can issue bonds to those other bigger multilateral organizations so that they can offer financing for their budgets. And then, of course, there are also larger institutional investors abroad who could come from other markets, for example, in developed markets to invest in bonds here. An example I have is like, I think Ghana. Ghana has a Euro bond that it issued, and it was the capital was externally provided by investors outside Ghana, and they issued a Euro bond. Yeah, thank you. Did I answer the questions? Is there any other question?
I just have a supplement
Oh, thank you.
on what you said. And right here, I have a form, a bidding form. And if you want to take a look at it like physically, you can. You just go to the BOU website. In the third, I think, fifth slide, I shared it, and in the center of the slide, you'll see the BOU Bank of Uganda website. And you go to where financial markets are when you look down on the website, and then it will show you, and you'll be able to go and get like the auction bidding forms. So on the forms, they have a slot where they ask citizenship, local or foreign. Yeah. And so, yeah, I believe that it is open to foreign investors. So, and in the event, because you just invest through a local bank, like Mama Christine said. So if you can have an account with a local bank, then yeah, I believe you're able to buy bills and bonds locally. I mean, internationally. Yeah.
Thank you very much, Pastor Treasure. Rachel, can you tell us about the UTTs, and then we will hear from Annette?
Okay, thank you very much. So UTT stands for Unit Trust of Tanzania, which is an organization run by the Ministry of Finance. It's a mutual fund organization, and I'll not repeat what Pastor Treasure said, but under UTT, there are 5 different funds which are operated under UTT. There is bond fund, where, let's say, if you want to buy bonds, but you don't have the exact amount to buy like treasury bonds or government bonds. Let's say their starting amount is 10 million and you don't have 10 million in your bank, but you still want to buy bonds. So UTT provides that option for people that have like a low income. So let's say you have 1 million or you have 500,000, you can buy bonds through bond fund under UTT. And there are also 2 kinds of bond funds. So depending on the exact scheme that you have applied for, it will also determine the rate by which you can redeem that fund back. Like if you want to sell your units and you want to redeem that money back, it will depend 6 months to a year, sometimes 1 month. So it depends. And how long you would get that coupon rate, the money that they pay you every 6 months or 3 months. But there is also liquid fund, which is the most recommended for most people, especially if you want to easily access your money back. And this is good because annually you get about 13% dividends from it, interest. Aside from that, but also apart from just keeping your money in a bank whereby it's being deducted, or let's say in a savings account whereby the interest rate is low, when you invest in like UTT through liquid fund, they pay you at an annual rate of like 13%. Last year it went up to 14%, and you can easily retain that money at any time you want. And they also have children fund, they have a life investment, they have and Jikimu fund. So they have 5 schemes under UTT, and it's a mutual trust which is run by the government, and it is at very little to no risk. So that's just brief what I can share. Thank you.
Thank you so much, Rachel. Yes, Annette?
Thank you so much, Pastor Treasure and other presenters. Mine is on the Bitcoin. I don't know if we have any experience in investing in them, because the time I tried, I made a loss. I don't know where the money disappeared. It was through a link. Someone told us to invest, and yeah, I ended up losing. So I don't know if there's any experience or any advice along Bitcoin and those online trading solutions. Thank you.
Yeah, for that, Haruni, are you able to speak?
Yeah, I can help with that.
Thank you.
First of all, I would like to put this disclaimer or like a warning. There are so many schemes that have come in the name of investing in Bitcoin or cryptocurrencies, but they are not. So most of the time you will put money will be there. Sometimes there will be like an back-end engine showing you that your money is rising, but is not rising. After a certain period of time, you will not be able to take out your money, and that platform will cease. For my experience, since 2017 up to now, I've seen hundreds of platforms like that have been ceasing. So it's not really that you invested in Bitcoin, it was just a scheme. So a good way to invest in cryptocurrency, like a suggestion, the quick one I can say, is you to buy when there is crypto market crash. There are times that crypto market crash intensively to the point it creates fears to all crypto traders. Many people get out of the market. That's the best opportunity to buy crypto, whatever kind of crypto, but there are those major ones. I mean, before you buy any kind of cryptocurrency, you should check if it is one among the major. There is a platform, I'll share a link, Coin Market Cap. You can go there and check the most major cryptocurrencies. You'll see them there. So you need to have a wallet that will keep that crypto by yourself and not put it on any other investment platform. You need to have a wallet. And I suggest all of us here, even if you're, no matter you're interested or not interested, for learning purposes, I suggest all of us to have at least a trust wallet. It is easy, you don't put any kind of verifications, and it's one of the safe wallets that you can store your cryptos. So you can store your cryptos there, but if you'd like to buy bulk cryptos and you want to be sure that you are storing them safe, you can reach out to Rachel and we can consult you and help you to how you can do better way of keeping your cryptos that they will not disappear. So crypto investment is good, but you just be in a good timing that you buy when they are low, and when they appreciate, you have a significant gain, you can sell them. But where I suggest you start with Trust Wallet, that will help you. So if you are keeping your cryptos anywhere else, it's risky because you are not sure, unless maybe you share with us the platform you are using to keep. We can recommend whether it's is reliable or not. I thank you. In short, that's what I can share.
Thank you. Thank you very much. I think this has been really interesting. There's a question that says, thank you so much for this information. Are these trusts available in all financial institutions, in banks, or some specific financial institutions? And then can a church or I didn't get that, be able to invest in trust bonds, and how? This is to Treasure and Timothy.
Okay. Can a church, sorry, the
Can a
question,
church invest? Can a church be able to invest in trusts and bonds?
in the unit trusts, I believe, depending again on their financial goals. Yeah. If a church, basically what the trusts do is that they get your money and then they invest it into all these securities we've told you, and then they give you a return, and it's a guaranteed return because for them the agreement you're going in there with them is for them to give you a return on your trust, on the units that you are buying in that general mutual fund. Yeah, the collective money that they are collecting as a trust. So if whether it's a church or an individual or an organization, like if you have a goal, yeah, like for example, for us, we have a fund for building. We want to build, and as a church, yeah. And so instead of getting that money, keeping it in the bank to accumulate interest, and and you pay fees on keeping it there. Basically, this is an option where, as you save up to maybe in financial terms, we usually call them sinking funds. If you have something that you have a goal that you're saving for, you get that amount. It's better to put it in a unit trust, let them invest it, let them incur the risk, but then let them assure you of the return. And so for you, what you get back is your principal amount. Say if you put in 100 million shillings and you want to pick it up maybe when you start your project, if it's been 2 years or 3 years, they will give you your 100 million plus the accumulated interest that it has got in return. And therefore, the money was there making money without you being on your toes, and also you're not having to pay for its storage, which you'd have to do if you kept it in a bank. Yeah.
That's amazing. This is amazing. We will need to organize a clinic where we will all sit down physically, go through the websites, and maybe even invite some bankers to show us how you get into the system, what forms you have to fill. I think we do need to follow up this session so that we can really get into the crux of it. Because I would like to see a couple of people or more starting to invest as a result of these sessions. So next week, we have a very exciting topic, and it's on real estate. And it will be led by Timothy Masembe again, and Pastor Moses Nsubuga, who is INOZA's representative for Uganda. So very, very welcome everyone for next Monday, same time. And thank you so much for your participation, your very pertinent questions. And just to announce that those who have not yet registered for INOZA's Becoming a Person of Influence, you're losing out. You won't be able to move beyond your current little sphere unless you become a person of influence in your field. So please register for the training. Register before Wednesday, which means tomorrow. We'll be able to hold the introductory session for you on Wednesday evening. So please register, and those who, if you bring another person, you get a 10% discount. So thank you very much, everyone, and may the Lord bless you and keep you and make his face to shine upon you and be gracious to you, and may he fulfill the desires of your heart, and may your good works multiply. Thank you so much, everyone. But you can put on your videos so that we can say bye-bye to each other. Thank you so much, Pastor Treasure and Timothy, for leading us today. We really appreciate you. You've done a fantastic job. But we need more. We need a clinic. Yes.
See you next.
Thank you, everyone.
Thanks, everyone.
Thank you.
Let's hear
Bye.
your voices. Hi.
Bye-bye.
Thank you. Goodbye.
Be
Bye.
blessed.
Bye, everyone.
Bye.
Thank you. Goodbye. Yes.
Bye.
Bye.